Most traders lose money not because they picked the wrong asset, but because they had no plan when the trade went wrong. In this video, you'll learn every term you need to trade gold CFDs on the biggest American platforms, with confidence, not guesswork. Gold is traded as XAU-USD. That's ounces of gold against the US dollar. The spot price is what gold costs right now in the live market. On platforms like TD Ameritrade and Interactive Brokers, you'll see this price updating every second. A CFD, contract for difference, means you never own the gold. You're trading the price movement only. With 120 leverage, $500 controls $10,000 in gold. That's the power and the danger of CFDs. Margin is the deposit you put up to open the trade. Margin is the deposit you put up to open the trade. If gold moves against you and your account drops below the required margin, you get a margin call. If gold moves against you and your account drops below the required margin, you get a margin call. The platform closes your trade automatically. The platform closes your trade automatically. No warnings. Stop loss is your exit plan before disaster. Stop loss is your exit plan before disaster. Set it at $1,900. If gold falls there, the trade closes automatically. Set it at $1,900. If gold falls there, the trade closes automatically. Take profit is the opposite. Lock in your gains at $1,280 before the market reverses. Take profit is the opposite. Lock in your gains at $1,280 before the market reverses. These two orders are non-negotiable for every trade. Going long means you believe gold will rise, you buy. Going short means you expect a fall, you sell first, buy later. On CFD platforms, you can profit in both directions. Most beginners only trade long and miss half the opportunities. The spread is the difference between the buy price and the sell price. That gap is the broker's profit on every trade. In gold CFDs, spreads are measured in dollars per ounce. A tight spread means lower cost per trade. Always check this before choosing a platform. The three biggest American platforms for gold CFDs are TD Ameritrade with Thinkorswim, powerful charting; Interactive Brokers, lowest fees for professionals; tastytrade, great for options and futures on gold. Each has different margin requirements and spreads. Professional traders risk only 1 to 2% per trade. If your account is $1,000, max loss per trade is $20. This keeps you in the game when the market moves against you. Most beginners blow their accounts in 10 trades because they ignore this rule. You now know XAU, USD, CFD, leverage, margin, stop loss, take profit, long, short, spread, and the top US platforms. Save this video. Come back before every trade. Subscribe for the full gold CFD trading series, one concept per short, every week.